Well, I have the honor to announce the exchange panel for today. It's about how technology will disrupt the exchange industry, and therefore we all give a warm welcome to Shelley Orr, currently some minor technical problems, head of commercial management market data at Euronext. We have Claudio Vivian, CIO at Grupo Bolsa Mexicana. Buenos dias, Claudio. We also welcome Matthew Fuchs. He's leading the product development, distribution, and sales of market data at OTC Markets Group as executive vice president, sorry. And our moderator for this top class panel is Peter Rendell, president at CETL. Good afternoon, Peter. The stage is yours.
Thank you very much indeed, Dr. Bernard. And welcome, ladies and gentlemen, to what I hope is going to be a provocative and thought-provoking set of questions and answers. Wanted to just start off with the observation that we live in a strange world where, from a business model point of view, our customers have to buy our price lists before they can buy our products. That's market data. It has some very interesting angles, it has some very interesting opportunities, and it's changing very dramatically. It's changing because of technology, it's changing because of customer usage, and it's changing because of issues around privacy. These are all things which I hope we're going to be able to just touch on this afternoon. But before we dive right into the panel, we've had a very kind introduction from Dr. Bernard. But I'd just like to see if Shelley is now back in and joined us. She's not. Okay, so the first question was going to be for Shelley. So let's go straight on to the second question, which is one for Matt. So Matt, bearing in mind your background, could you just spend a little bit of time talking about what you see technology driving the recent surge in the retail market, what you see is going on there? How do you see that affecting exchanges? I'd like to understand how things are happening in the low zero commission trading environment and what you think it means for retail investors and other participants in the markets. Thank you.
Right. I'm going to speak, more from the U.S. Perspective because OTC Markets Group, we run a marketplace for U.S. Equities that are not listed on a U.S. exchange. They have about 11,000 securities. 6,000 of them are non-U.S. So in the U.S. Environment, technology has really driven us to a, basically a zero commission situation for retail investors. And that, plus what's gone on with the pandemic has really just driven retail participation, especially in the U.S. And I think this is actually happening globally as well. What we've seen is basically 40% increase in dollar volume traded year over year, which is, we're hitting, we've surpassed numbers that we saw in the 2007, 2006 timeframe. What that also means from an exchange perspective is what we've seen, what technology has also done is really enable retail investors to communicate with each other. And I'm sure we've all read about the GameStop type of scenario, but what technology has enabled is that type of communication with retail investors between themselves. And it's also made the notion of promoting stocks or getting news out about stocks that much simpler for one, for issuers, but also for the investors. So from the exchange perspective, we have started to monitor and do surveillance around what's going on in the retail marketplaces. And so from a compliance perspective, we built applications that are monitoring some of these chat boards, social media, a lot of the newsletters, so we can understand what's going on. When we see spikes in trading, when we see, different activity, and, we've had to, have a dedicated compliance group that's looking at this. So what technology has done, it's brought costs way down, but it's also, given individuals this ability to communicate, which just didn't exist before, and to be basically talk up a lot of these securities. And there's good and bad to it, but from an exchange perspective, what it means is you've got to be monitoring it and using technology to monitor it, because in our case, we have 11,000 securities. It's impossible without using technology to try to monitor these type of situations. So it's an interesting paradigm shift, and I think it's going to continue for the foreseeable future.
Yes, Matt, I think that's a very, very interesting point. The idea that responsibility for monitoring where information is coming from is being adopted by you guys, and I wonder to what extent other people are seeing similar sorts of things, because we all know that some of the very sophisticated high frequency players have been monitoring Twitter feeds and all the rest of it for quite some time. So to what extent is that also now part of the market data environment, if you will? So I don't know if anybody wants to jump in on that. Shelley, maybe, if you're back, or Aaron, would that be one for you, maybe?
To be honest, we tend to focus very much on the exchange world, but we're certainly seeing a lot more interest in other data sets. I mean, we're getting more calls for kind of almost data about data, if that makes sense. So as you said at the beginning, a strange industry where people almost pay to see our price lists or see exchange and vendor price lists. We're getting calls now for people wanting a catalogue essentially of where data is and how to find it has almost become a small industry in and of itself. So yeah, we've become such a broad spectrum really of data sets available and things that fall under market data that I think that there's a huge amount of effort going into trying to keep on top of where all of that is more than anything.
Thank you, Aaron. Just before I turn to Shelley for a question, Claudio, do you want to contribute to that at all? Is it something that you're thinking, or do you have views on?
Well, not that much. In the case of most of Latin American markets, we are not dealing right now with the retail industry. So, we expect that this will be open in the coming years. So, getting into Matthew's comments, this will require a significant, let's say, development of new capabilities, not just related with monitoring, as Matthew mentioned, with the social networks and everything, but also monitoring the infrastructure the different customers are taking. But the reality is that we are expecting this to open, and we are promoting this to open in the coming years, but we are not there yet in Latin America, at least.
Thank you very much indeed. So, Shelley, welcome. I'm glad that the technical problems got sorted. So we just go back, I think, to the original sort of starting point for our remarks today, which was a question to you, which I hope you can respond to. How do you think new technologies are going to influence and shape exchange market data policies? How do you think those are going to affect contracts, in operations? What do you see, if you will, in the next 12 to 18 months coming down the pipe that's going to be of interest to both producers of market data, but also users of market data? Shelley?
Yeah, I think, thank you, Peter. I think the technologies and emerging technologies will influence the market data operations and policies in several levels. I think what you will notice is that a lot of exchanges, including Euronext, are looking to automate some processes, licensing processes, reporting processes, and really using systems to do that, where previously clients had to fill in a lot of paperwork. We're looking now into having web portals where you can just order a single product and don't have to go through that whole hassle. And also what we see as exchanges is, of course, market data compliance is always a big topic around that. And also everybody knows the audits can be quite cumbersome, can also be quite challenging from both a user and exchange perspective. So what we really try to do is move moved that sort of up to what we call proactive compliance, whereas our systems are actually designed to really sort of monitor the usage and the reporting of the usage, and being able to identify quite early on already any potential errors, etc. So we can catch them early on and actually help reduce the risk of large audit findings for our clients. And also, of course, that will be very good. But also what you see, it goes even beyond that now. And this is really still, I think, in quite early stages. But I think the industry is also now looking into what we call machine-readable market data contracts and policies. So where you no longer need a person to actually interpret contracts, policies of exchanges, but rather have a machine learn them and implement them for you at the same time. There are, of course, a lot of challenges to this. This would be very new, and also there are some legal challenges there on, for example, if the machine makes a mistake, who's liable, who's going to sort of, deal with that, who's responsible. But it's definitely a major opportunity in reducing the work around this. And also what we will see is that some technologies will influence market data policies in a way that policies get outdated. You see always when a new technology emerges, people will use the data in different ways. And sometimes those differences in how they're used and also the technology that is used will sort of render certain policy outdated. We have seen that with the move from display use to non-display use, but we'll probably also see similar things with the emergence of cloud delivery services, where there's no longer a direct link with a physical device necessarily. So I think those will be the main questions that we'll see in the next couple of months.
I think it's an obvious point that the complexity required in some of these contracts these days, if you make them machine learning enabled, that complexity was probably going to go up rather than down. But Aaron, what's your view?
Yeah, I mean, I would echo pretty much everything Shelley said, to be honest. Technology, I would argue, has probably been one of the biggest drivers in exchange market data policies, certainly in the regularity that they change. They tend to be playing catch up, and as Shelley said, the favourite sort of example of that is non-display, I guess. But I mean, before that, we had streaming, contended use, all of these technological advances where contracts then had to play catch up, essentially, and change and try and keep pace. I think going forward, exchanges will continue to adapt policies to reflect all of these new use cases. Pretty much echoing what Shelley just said, the relevant example is definitely the use of the cloud. Concept for site doesn't really fit anymore. It makes licensing on that basis, really quite complicated, and just doesn't fit the model in terms of what we tend to talk about. So things will have to change there. With regard to how exchanges are going to use technology, the biggest one once again is ODRL, or digital rights management in general. But I think that's a start. That's a language. There's a lot of work that's got to come after that for consumers to consume those contracts and then enforce them. That's where the real technological challenge is going to come. As you say, Peter, it's very complex policies. Therefore, you're going to have complex systems monitoring things like application usage, user usage, whether things are being distributed externally, whether data is being derived, all of those sorts of things. So yeah, I mean, it's kind of echoing what Shelley said, but I think they're the sort of biggest drivers of the market. And then the way that we interact, or the way that clients interact with exchanges, is definitely changing. There's a lot less paperwork. I can remember when I was at the London Stock Exchange, the first terminal returns form that I was responsible for had carbon copies on it, 3 carbon copies. And the customer kept one, and we sent a couple of others around. Now we're into self-service portals where we can go on and start to use natural language questions to sign up for a new license. So yeah, huge steps forward. Interesting.
Claudio, turning to you now. In terms of your exchange and in terms of the challenges that you're facing as CTO, what specific technologies do you see coming down in the next little while that will impact the industry in the future?
Well, there are a lot, I would say, that, we are all in the same page that technology is changing everything. But with the pandemic of COVID-19, this has been accelerated significantly. and changing the way we're working. I would say that going in the page that already Shelley mentioned, RPA, artificial intelligence and machine learning, will be in the short term, I would say, key elements for cost reduction and hyper automation. The problem maybe is that this will reflect cost reduction in the operations, but this will be, at least in the midterm, transferred to the customer. So there is no, I would say, a kind of benefit in the long term. So we will have to look for anything else. Cloud is something that is playing, of course. Fintechs are all of them based in cloud technology, but also the creation of this kind of clusters or ecosystems, reducing the cost and forcing for standardization and maybe I would say the condition of a possible industry consolidation in the short term. But in the midterm, there are also some let's say effects that artificial intelligence the way that artificial intelligence will impact. For example, facilitating the creation of new products and services, but this will require the flexibilization of our IT legacy infrastructure, and then introduce new practices in the way we do things, like agile and exploiting the cloud. I would say that there's also a significant impact. APIs is something that will impact also the market in the midterm. This will drive to standardization, to standardized connection within players and integrating processes, and then this hyper automation will get broader to the organization. Having this data standardization will also impact our industry in order to facilitate data analytics and create value for clients. This is another challenge we have in order to develop. And finally, I would say that an additional effect of cloud-based data analytics will bring the opportunity to develop a kind of software as a service ecosystems, and then getting this environment to facilitate analytics and workflow kind of stuff. The problem I see is that the reality is we are not, let's say, in the head of these kind of technologies. The big technology companies are much better than we are, and there is a risk, or at least at the same time an opportunity, of having them playing in our field, and then the possibility, maybe the risk of consolidation, or maybe having new entrants with new rules and new ways of doing things. So big impact, in a summary, in the coming years, maybe from 3 to 5 years, significant.
Thank you, Claudio. Very good answer. Matt, just turning to you, from a different point of view, I suppose, but surely the observation is that there are people out there in the broader ecostructure, some of whom have got liquidity and some of whom want liquidity. And part of the activity of a platform, or part of the activity of a broker-dealer, is bringing together those people to create a transaction. It doesn't have to be in an exchange. It could be in a broker-dealer. It could be in other venues. And certainly we're seeing with the crypto exchanges and things, those sorts of models be very, very different from the existing structures. I know we operate within the walled garden of regulation, but how do you see this changing?
Right, and I mean, you make a really great point. And one of the things, and this kind of comes out of what I was saying before around the retail market, is retail markets are driving a lot of this interest in, crypto, other alternative assets, right? And exchanges, marketplaces need to react to that. Another example that affects our marketplace is cannabis as well. So, there's obviously in the U.S. there's laws regarding cannabis. So the listed exchanges don't have any U.S. operating companies on them. We're allowed to have them, but the exchanges can have Canadian-based companies. So we have to, like you said, operate within the walled garden. But there's a lot of pressure coming from the outside and demand around these assets. Same concept with crypto. There has been a number of ETF providers, petitioning and applying with the SEC for years now to get a Bitcoin-based ETF fund on an exchange. So that's something. So, and obviously the exchanges, want to be a part of that. And our function at its core is what you were saying, Peter, is to bring buyers and sellers together, right? So these are just assets. And to Claudio's point, right? In the end, technology makes this a lot simpler to bring these buyers and sellers together, right? So as exchanges, we have to be able to adapt and react to this. And that's really also what's kind of driving the consolidation between distributors and exchanges, right? Because it's much simpler to be a distributor now. And because of the cloud and the flexibility, and, distributors recognize that. So they're, everyone's, getting together with the content providers and going vertical there. So it's, the world gets smaller every day, right? So it's kind of how things go, but it's all those factors. And, to be an exchange, you have regulatory structure, but all these pressures are coming from the outside that you need to react to.
Yeah, that's a very well made point. So Shelley, do you have any thoughts on that?
Yeah, I think we experience a bit the same as, of course, Matthew does. I think there's a great momentum on assets like crypto assets, although we always very clearly distinguish between the cryptocurrencies like the Bitcoin, which is been the key driver of that success, and which represents about 65% of the total crypto asset valuation, and are very, particular animals. And you also have, of course, the other crypto assets like security tokens, stable coins, etc., which are more regular financial instruments, but that are then represented as payments on the blockchain. And I think that as exchanges, indeed, as Matthew says, we are clearly very well positioned to capitalize on those instruments. However, the opportunities differ per actually what asset type, particularly on the cryptocurrencies like Bitcoin. There's a real difficulty for exchanges, but also I think for other financial market institutions because of the lack of regulation. I think we do expect in Europe, at least in mid-2022, some clarification on the regulation. It's a dedicated framework referred to as MiCA. And we hope that will sort of help clarify some of those elements. And of course, it is very important that in that framework also, while you address those opportunities, that you still, of course, keep in mind investor protection, but also really the market integrity principles that we have in Europe. And then I think you also have, of course, the other crypto assets. I think sort of the blockchain and tokenization are really good tools to start creating some liquidity in liquid asset classes. And particularly in the private equity, in the real estate, these are perfect opportunities. However, the market in Europe on this is still quite nascent, meaning quite in the beginning stages, but definitely with some opportunities for exchanges to develop that. And I think that Euronext has invested already in that space quite early on. We took a stake in a tokenization provider, Tokeny, in 2019. And then further on, I think blockchain has, of course, much more opportunities besides the crypto assets if you do transversely in making processes sort of more operational. And this is also one of the reasons why we really have sort of started that early on by.
Thank you, Shelley. Very helpful. Very helpful. Turning to you, Aaron. So we've heard some sort of competitive headwinds that we've got from different sorts of makers and takers and demanders and offerers of liquidity. We've heard some different technology challenges that are coming down the pike. And then at the same time, there is, there are very big projects beloved of regulators, such as a European consolidated tape, which is it's got complexity written all over it, as far as I can see. So could you give us some thoughts around the consolidated tape, the dimensions of the problem, and what you see as being the desirable 3 to 5 year outcome? Thank you.
Yeah, I mean, in terms of dimensions of the problem, I think it's. Firstly, I guess it kind of has issues on both sides of the coin in terms of it's a technological headache to actually produce and to actually distribute, and then the governance around it, because it's never going to happen without being regulated. There is no. There's no commercial reason as such for a consolidated tape to exist unless it's tied into some form of regulation like it is in the States. I guess from my point of view, the biggest question mark would be the form that it would take. So I think because of the US model and the way it's been for so long, certainly for the 7, 8, probably 9, 10 years even that this has been discussed while I've been in the industry, there's been an assumption that a European consolidated tape would be one aggregator that would probably potentially be picked to produce a tape, and that would be it. I think now, given what's going on across the pond, in the idea of competitive tapes, that is probably the biggest kind of question that would have to be answered. If we were to look at a regulated tape over here, does it take the form of a single aggregator, or is it competitive aggregators? And actually, the only thing that's set down are the rules and methodology to build that. So, I mean, the other kind of angle to it, I guess, on the governance side is once again looking to the US. Obviously, the MBBO is actually part of the trading requirement. That's why the consolidated tape exists in the US, is that you have to have it because you have to be able to trade and know what the national best bid offer is at any given time. So without that requirement in Europe, does a consolidated tape have a place, I guess? Because in truth, without that requirement in the States, and that's the problem that's trying to be answered by a competitive tape, it's now, the tapes are considered not to be very content rich. They have inherent latency because you've got to consolidate all the prices compared to going direct to the exchange. Obviously, the data is coming from geographically disparate locations as well, which adds to the latency. So, I mean, these are all the commercial kind of governments and technological issues that a European version of tape would also face. So, to be honest, I don't really have a view on where we might be in 3 to 5 years' time, apart from it will likely still be an idea that we're still discussing at conferences, kind of, in my opinion.
Like interoperability between clearinghouses, it could probably go on and on and on and on and on. But let's just make one other point, which I think is certainly beloved of myself. It's something very near and dear to my heart, which is that if you have individual exchanges producing their own market data and then producing their own indices, which are followed by very large sections of the passive investing community, if for some reason that platform is out, then there is no index, and if there is no index, then there's no or very little trading activity. So, in a sense, a consolidated tape where index compilers can use the broadest possible detail around activity and volumes is going to be important. But I can completely agree that it's a complex matter. So in terms of that as well, Shelley, obviously being another large European exchange, I'm sure that there are Euronext views on the consolidated tape. I won't ask for their views, but I'll ask for yours.
Of course, no problem. No, I think it will definitely, as Aaron mentioned, be a challenge. Although I think for us, different from Aaron, the question is no longer really whether it will be multiple tapes or single. I think there's quite a clear move happening in Europe towards a single European consolidated tape. I think the main challenge will be really indeed the technical and the governance challenge. But then in terms of, the sort of technical challenge, it will be really the difference where 2 tapes are being discussed in Europe, what we call real-time tape and end-of-day tape, with different technological implications. I think a lot of people always say, well, you have the technology for both, so why don't we just build a real-time tape? But I think what we always say is, well, that's only for people that look at it as a free option, the CT. I think what we generally experience as an exchange, and we have, of course, quite extensive experience with disseminating real-time market data, etc. And what based on our experience, a real-time tape is much more difficult to maintain and also much more expensive to maintain than an end-of-day tape. So we think actually the technological challenges can be mitigated by going for an end-of-day tape, and that leaves a lot of room to sort of focus on the more complex governance issues. And I think in terms of those governance issues, I think what we're struggling still with as in Europe is a clear use case or clear business case for the consolidated tape. I think an overwhelming majority of the use cases that have been identified for consolidated tape are already being serviced today by existing vendor or in-house solutions. And I think also, of course, in terms of the governance of tape, who is going to actually govern it on a daily basis, on a strategic basis? We have, of course, many stakeholders with lots of different interests. So indeed, you need to have a very well-balanced governance system. And we definitely think there's also a very clear role there for regulating bodies like ESMA. And of course, then you get to the compensation. How are you going to compensate contributors in order to still reinforce the important role they have in maintaining those transparent markets? I think these are all kinds of questions that have to be raised and are quite complex to answer and to get right.
Thank you very much. Turning to you, Claudio, in the closing minutes of our session today, and I'd like to thank everybody, including DKF, for putting this on. I think it's we've had some interesting conversations already. But turning to you, Claudio, just very, very simply, in terms of the future of the exchanges as a business, as an industry, are you optimistic? Are you bullish on that, or is it something that you see further headwinds coming down the pipe from challenging technologies?
Well, we're optimistic in terms of the opportunities, but the reality is that the, let's say, economic situation that has proceeded from the COVID-19 pandemic is reducing significantly the speed of the markets. So we're optimistic in terms of growing in kind of different markets, like of course the market data and platforms to offer value-added services to our customers. I would say that in terms of the pure exchange, we believe that this will last. I mean, the slow condition will last at least for the coming 18 months. So it's a kind of mixture of feelings at this point. But at the end, we are optimistic that there's still significant space for growing in different areas. But we need to develop new services and new value for our customers.
Great. Well, just as we wrap up, I'd like to just go round the table again. And first of all, I'd like to ask our technical people if they can send any questions through to me, because I don't seem to be able to see any here that have come in. But assuming that there are some, before we go to those questions, just in the closing moments, I'd like to just sort of pose effectively the same question to each of you, which is the one I've just put to Claudio, in terms of optimistic or pessimistic or worldly wise, shall we say, on the future of the industry and the platforms, and in particular on the models around market data. So start with ladies first. Let's start with Shelley.
Thank you. No, I think positive, definitely. I think I say with the new technologies available, there's so much possible still that we can't even comprehend completely yet. I think that we'll see in the future more and more data getting available, more also alternative data, not just the market data from the exchanges. I think what we'll see, and what we've also seen, is that more and more people have access to real-time market data also on the retail side. And I think that's good. It's good. We're going into a transparent direction, and I think we should sort of go from there and seek the opportunities that the new technologies have to offer us. So definitely positive.
Matthew.
Yeah, I mean, not to, same, definitely positive. Our position, in the U.S., it's still the largest pool of capital. We see that as, a big benefit. We have a ton of, global foreign securities that trade on our marketplace. We see a lot of opportunity there going forward. As I mentioned before, there's going to be consolidation that always occurs, but I think the exchange, again, we're bringing together buyers and sellers, and that's something that new assets are going to come into, and we're well positioned, all the exchange groups for that type of thing over the next coming years.
Great, thank you, Matthew. And Aaron, finally to you.
Yeah, I mean, obviously, as a vendor or a supplier of services in TRG Screen, we're from a slightly different angle. I don't know whether it's positive or optimistic in terms of, or pessimistic in terms of sentiment, but certainly, yeah, I don't see the complexity disappearing anytime soon. Like the rest of the world has kind of woken up to our world, if you want, and data and how important it is, and it's only going to continue. And therefore, from our point of view, people are going to need the services that we provide to understand the data they're using and work out the costs of it, allocate it, all the rest of it. So yeah, I certainly don't see market data as a diminishing space. I think it's just going to become more and more important to customers.
Excellent. Well, thank you very much indeed. That's very helpful. In terms of questions, I don't know if the technical people can put up questions. I'm not seeing any in my feed. If there are no questions from the audience, I'd be surprised, be somewhat disappointed. But if there are any, if they can send them through to me or get them to me, then more than happy to ask them. Otherwise, I'm going to have to say to Dr. Burkhardt that I think we're just about done, Stefan.
That's correct. Same question from my side. I can't see any question from the audience, what is unusual, but yeah. In any way, fantastic panel. Peter is leaving.
No, sorry. Somebody just arrived at our front gates and they're electric, so I've had to open them. So,
yeah.
That's now been done.
No, so, but Peter, it's perfect. We are,
there we are.
As far as I can see, we are perfect in time.
Okay.
So because we have 2 streams to serve, so that means they probably wait on the other one from the other side.
Okay, well, I'd just then like to spend a moment right at the end saying to Aaron, saying to Claudio, saying to Matthew and Shelley, thank you so much indeed for a provocative and thought-provoking session today. And I look forward to hearing how each one of you is progressing in your businesses over the next 12 to 18 months. Well done, and thank you, DKF. Bye-bye.
Thank you, Peter.
Thank you very much, Peter. Very professional. Thank you.
Thanks. Bye-bye.
Thank you.
Bye.